Hello and welcome to the Weekly Watch podcast series. I'm Jim McCormick, Global Head of Desk Strategy at NatWest Markets. This series helps you cut through the noise in global financial markets with a quick take on the upcoming trends to watch. Last week was a fourth down week in a row for global equities. The MSCI Global is now down 7% from the early September peak. But for me, the bigger story was what looks like growing concerns about the outlook for growth in Europe. The equity weakness last week was led by European markets, European banks in particular. And if you look at the currency market, European currencies that are normally good guides for regional growth, like Scandi currencies and Eastern European currencies, had terrible weeks. Now, while the European outlook has been clouded by the spike in COVID cases, I do think the market is getting carried away. Let's just start with COVID. Despite the surge in cases, it's worth noting the average mobility and stringency indices in Western Europe haven't really changed very much. This is not a repeat of what we had last spring, not by a long shot. As far as growth, weaker September flash PMIs last week were disappointing, but the strength in manufacturing in Germany in particular was encouraging, and German export orders are back to the end 2017 peak. As far as politics, obviously the U.S. election is the main focus at the moment, but it shouldn't disguise the better political momentum in Europe. Near term, a Brexit trade deal looks perhaps more likely after some better news in recent weeks. This is going to be a very crucial week where we'll find out a lot more. Our base case is the same. We do think a deal gets done, but the chances of an accident are still very high. Medium term, I think the Italian regional elections were pretty important, and they showed how populist parties are losing appeal across the region. This is a pretty big deal for markets, and I think it's highly underappreciated. And as far as policy, as U.S. Congress fails to pass new fiscal measures week by week, European countries have been adding more support without any fuss. What it means is the U.S. is facing a potential fiscal cliff. Most of Europe is not. So net, we'd fade the negative sentiment in Europe. We remain bearish German bunds, we're bullish on the euro, and we re-added a bullish Italian BTP position last week. One other theme worth noting here is emerging market central banks are shifting emphasis away from rate cuts towards supporting very weak currencies. This was most visible in Turkey last week when the central bank surprised with a 2% rate hike. But you also see changes coming in countries like Mexico, Hungary, and elsewhere. And if you look at emerging markets outside of Asia, the EM currency space has had a very difficult crisis. This policy shift towards supporting currencies may be the beginning of a turning point, at least eventually. In terms of the upcoming week, it should be a busy and very consequential one. Politics will probably be the main focus. We'll have a much better idea, as I mentioned, of whether a Brexit trade deal is possible. Risks are finally balanced, but we do think a deal ultimately gets done. We do have the first presidential debate in the U.S. on Tuesday night. The week started with the New York Times releasing the last 10 years of Trump tax returns, so that's clearly going to be a big focus. It's worth noting heading into tomorrow's debate that the 538 election model has Trump probability at just 22%, the lowest since June. It's also a very busy week for data, probably two data points worth mentioning. U.S. payrolls on Friday will be probably the most important data point of the week, and it's also the last employment report before the November 3rd election. We also get flash CPI data for the euro area later in the week. After distortions over the summer, the September number will give us a much better idea of where things are for inflation in the euro area. I hope you enjoyed this episode of the Weekly Watch, and please do subscribe to our channel to get future episodes. We also encourage you to explore more of our content on our website and social media channels. Speak to you again soon.